Hey, what's up guys, welcome back to the channel. In today's video I'm going to be going over one of the biggest and most hotly anticipated IPOs, ticker symbol RIVN, that over the past few trading days has absolutely skyrocketed. The EV market has obviously gained a lot of momentum over the last month or so. However, Rivian's IPO has really taken the entire market by storm. As of writing this video, this stock is now worth almost $140 billion at around $170 a share, which really begs to ask the question as to whether or not this super high valuation is actually sustainable long term. In this video, I'll go over the latest news out on Rivian, discuss the long-term prospects and risks for this company, and at the end I'll do an analysis of the stock chart to get an idea for when the stock could top and what prices I'm personally looking to buy at. But before we get into it guys, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. To start off, let's break down the path that Rivian has taken to go public in the first place and what factors have really pushed the excitement around this company. As a full disclosure, I'm not long or short Rivian's or any other major EV company stock like Tesla or Lucid Motors, so I'll be doing my best to provide an unbiased point of view when analyzing Rivian. As you can see, Rivian went public at a valuation of around $66.5 billion on November 10th and picked up Amazon and Ford as some of its major investors at 20% and 12% stakes each. And since Amazon has a contract with Rivian to order 100,000 of their EV delivery vans by 2030, there was no doubt in my mind that this IPO would be a blockbuster. And so it was. Rivian opened up at around $100 a share, a full 30% over the pre-market price of $78, and in the following trading days has now basically doubled in price. Now, is this move insane and unnecessary? Yes, it absolutely is, but have a lot of people actually made money from it? Yes, they have. And that's all that really matters in the short term. At the end of the day, no one can predict how the market will move because of all the short-term trading, which is why a lot of the hate against people making money on Rivian is really pointless in my opinion. However, as a long-term investor, you have to judge the company from a completely different perspective, which is where Rivian's valuation becomes more scary. You see, even though Rivian started delivering some trucks in September of this year, these guys are still in a pre-revenue stage, so it's going to take a lot of capital expenditure and time to ramp up their sales. Their profit margins and operating expenses will be taking big hits over the next few years, and it's really hard to predict how Wall Street might react to them, which adds a lot of uncertainty and risk for investors. Given the fact that Rivian ended up raising around $12 billion from this IPO and now has over 6,200 employees, makes me quite optimistic that they'll be able to achieve their goals over the next few years. Lucid, for example, has around 1,800 employees, whereas a company like Fisker has only around 200 employees, which tells me that Rivian's business might already be more scaled up and more mature than some of the other EV stocks out there. Now, don't get me wrong, these factors definitely don't justify a market cap that's higher than 90% of all the companies in the S&P 500, but it does help justify some of the retail trader hype around this stock in the short term at least. On top of this, the recent volatility around Tesla could also be fueling Rivian's stock to skyrocket as more and more people rush out of Tesla and into other EV stocks that are seeing more momentum. As you can see, Rivian expects to produce around 150,000 vehicles in 2023 from their plant in Illinois, and if the demand is good, which has obviously yet to be proven, they might deliver around 50,000 vehicles in total. If we take the average price of the two models and do the math, that adds up to around $4.5 billion in annual revenue in 2023, and if you take Tesla's price to sales ratio of around $21 as a reference price, that comes up to a fair value for Rivian stock at around $74 billion, which is obviously much lower than the $140 billion the stock is trading at right now. Now, these calculations don't take into account any pricing pressure or any delays in production, but I hope it provides you guys a rough estimate at where this stock probably should be trading at based on the company's own future projections. However, because of just how unique of a product Rivian is developing and the order backlog they do have from Amazon, I am definitely looking to buy shares in the stock very soon. We all know just how huge of a market pickup trucks are in the US, and I love the fact that Rivian has become the first to fully electrify this segment of EVs in this country. However, the fact that most IPOs tend to underperform in their first year of trading and that the hype around them can generally die out very quickly makes me think that I'll get a much better deal on Rivian's stock price if I wait a few more months. On top of this, another very key and important factor that tends to drive a lot of hype around pre-revenue companies is the fact that typically a company will experience the highest growth it will ever experience in its lifetime when the company is private and when the company is just starting out its revenue streams. I know these days we see a lot of hate against pre-revenue companies and companies that are in much earlier stages than say companies like Tesla or NIO, but these companies generally will experience a much higher growth rate, and as a result, it might appeal more to retail investors and also institutional hedge funds and investors as well. Even though you need to be very careful hand-picking pre-revenue companies, especially through all the SPACs that we've seen over the past year or so, it's definitely worthwhile considering an investment in pre-revenue companies, because at the end of the day, you can get access to a lot of liquidity and you can get access to a lot of growth, especially as this company starts ramping up its marketing campaigns and ramping up its sales for its initial customers. And I think that's exactly what the market is trying to price into Rivian stock right now. We've already seen so many manufacturers in China like XPeng Motors, Li Auto, and obviously NIO scale up their revenue so quickly over 2015 to 2018. And even if the United States often lags China in production capacity, it's definitely a factor you want to keep in mind as you look forward to investing in EV stocks down the road. If we now move on over to the chart of Rivian's stock price, you can see just how overextended the stock has been over the past 4 to 5 trading days. As you can see, the volume has obviously picked up very significantly, and every single trading day we've made new highs to break out to all-time highs. And as you can see, the RSI is signaling a bearish divergence, which tells me that the momentum to the upside really is starting to lose a little bit of steam. Now, this doesn't necessarily mean that Rivian can't go higher, but it does mean that it's very risky if you're either playing call options around this $170 price level, because as you can see, just a few trading days ago the stock was trading at around 95 bucks, which means that you can get a much better deal if you potentially wait out for a pullback to these levels. If we pull up the Fibonacci retracement tool, you can see that I'd ideally look for an entry around this 50% retracement, or even better around the 78.6% retracement, which would fall around $137 and $113 a share respectively. But obviously, if you're a long-term investor, I would definitely wait out a few more months for the stock price to really settle down and all the hype and short-term traders to really get out of their position. Because as we've seen through stocks like Coinbase, the hype around IPOs in the very first few weeks can be very, very artificial, and we could often see a lot of selling pressure going into the next few months. And as you can see, if you had waited out buying Coinbase at its IPO, you could have gotten a much better entry price, well over 40 to 50% cheaper. And as you can see, more recently we're seeing a similar scenario with Robinhood's IPO after it ran up for 4 straight days and now has continuously sold off over the past 2 months. And as we all know, in the stock market, history tends to repeat itself, which is why I would not be surprised if you see a big pullback coming in Rivian stock in the short term. But long term, I do believe that Rivian can be a very successful EV maker given just how passionate the founder is and how much backing they have from companies like Amazon and Ford. And obviously given how high of a demand the product they're developing really has in this country. But anyways guys, make sure to drop me a thumbs up if you found some value from this video. Let me know what you guys think of Rivian stock down in the comment section below, and let me know how many shares you either hold or are looking to buy in the stock over the next few months. Also, feel free to let me know any other EV stocks you do want me to cover on this channel in the comment section as well. But anyways guys, I hope you enjoyed this video, and I'll catch you guys in the next one. Take care.